Hi, everyone. Hope you're doing well. I have a special guest with me, Hugo Renaudin, who is the CEO and co-founder of LGO Markets. Now, you may have heard of LGO Markets, an institutional crypto exchange which recently launched. Very exciting stuff happening on their front. So, Hugo, thank you so much for joining us today.
Thank you for having me.
Hugo, we heard the news on Monday of your launch, and it sounds like you have a lot of unique services that you're offering. So I think folks would love for you to give an overview about the company, the history, and the services that you provide.
Yeah, absolutely. So LGO, the way we started, so we started a bit more than a year ago, 18 months ago. And the premise of the project was to bring transparency to the cryptocurrency space. And when I say bring transparency, it's bring provable transparency. That means that transparency which can be demonstrated with technology. So that was the start of our project. We wrote a white paper on that. We did an ICO which got us funded. And slowly little by little, we started building. We started with an idea of building an institutional exchange. So an exchange that would allow institutions which are not yet in this market to actually come and buy and sell crypto. That was the idea. Now, doing that, we realized that there was a lot of exchanges. Obviously, there's a lot of exchanges in the space, but they all have the same kind of structure, right? So An exchange, a cryptocurrency exchange, is an exchange. It's a bank, it's a custodian, it's a clearing firm, it's a prime broker. It's everything at the same time. Works like a casino, right? You buy some chips, you can play with those chips. At the end of the day, if you're a good trader, you have a lot of chips. But if the casino, i.e. the exchange, doesn't want to give you money for your chips, you only have plastic. That's the same thing in the cryptocurrency space. And when you look at the traditional space like Nasdaq, New York Stock Exchange, Euronext, all those traditional marketplaces, they work incredibly differently. An exchange only takes care of the execution of trades, matching a buy and sell order. They work with banks, they work with custodians, they work with clearing firms, and the execution, the clearing, and the settlement is separated, and the risks are, let's say, spread between a network of actors. So what we did based on that is that we took the structure of a traditional financial market, execution, clearing, settlement, working with banks, working with custodians, and we applied this to the cryptocurrency space, adding a layer of technology which takes the benefit of blockchain transparency, which is transparency and which is also reducing the risk, the global counterparty risk across different actors. So what we have right now, it's a Bitcoin to USD exchange, which is, so the trading is physically settled. That means that at the end of the trading day, every client has dollar in their bank account and Bitcoins in their wallet. And the structure is very similar to a traditional exchange. That's what we have.
Got it. Very cool. Can you tell us a bit about the team behind LGO Markets?
So we have one of our core assets, and I know that a lot of projects say that, but for us it's very true. The core asset that we have is our team. So we're a team of 30 people between New York City and Hoboken and Bordeaux in France, 15 people. So we have been fortunate enough to be able to hire very high quality people at every angle of our product. So we have a tech team which is 15 people strong. So 50% of our headcount is for the tech. So we're a tech company. The tech team has a lot of experience in the space, in the cryptocurrency space, but also in software and hardware development space. So we have a group of very high skilled people on the tech side. And on the business side, we've hired a chief compliance officer, which was the chief compliance officer of 2 broker-dealers before us. We've hired a head of sales, which has spent 17 years in the financial industry in sales and for investment banks. We've hired former traders, former hedge fund consultants. We have a very good team and very high-skilled people, which are all, very energized by the project that we have. So we have this very good mix of purely technical people, which have a lot of experience in the crypto space, and some people which have experience in the financial markets. So we bring those two together.
Very cool. So being an institutional crypto exchange, you're going to be competing with some of the other big players out there. So what differentiates you from the Bakkt, the Fidelity digital assets, the Erisx, and so forth?
So first thing, we don't consider Fidelity necessarily as a challenger, more as a client, to be honest. For Erisx, Bakkt, those institutional exchange that you have right now, they don't solve the primary problem in the space, which is that you have to trust the exchange. Right? Mm-hmm. You have to trust the exchange in some way or another, because at some point in the process, the exchange will hold your fund. It's the same for Erisx, it's the same for Bakkt, same for all the cryptocurrency exchanges. At some point, the exchange holds your fund. So if the exchange gets hacked, if the exchange gets, if there's a problem with the operation of the exchange, the client's funds are stuck with this intermediary. And so it becomes a case of, trust me because I'm backed by Intercontinental Exchange, trust me because I have this investment, and that doesn't work out. And it's, to be fair, blockchain technology allows you not to trust and still be able to interact with people. Our approach is to say, don't trust us. You don't have to trust us. You can work with us with no risk, but you don't have to trust us. If we go bankrupt, if we get hacked, if whatever happens, the funds are still safe and clients can still retrieve their funds and the funds will not get lost. So, it's the difference between saying, trust me, I'm transparent and I have no risk, and saying, I can prove you that I am transparent and I can prove you that I have no risk.
Got it. And one of the cool features, which I think you're alluding to there about the trust aspect, is the multi-signature wallet, which, having read about that, it's very interesting. And if you can tell us a bit about that.
Yeah, so absolutely. So every client on our platform has a dedicated wallet. So we don't pool the Bitcoins of our clients into one single wallet that we control. Rather, if we have, for instance, 150 clients on our platform, we'll have 150 wallets. Those wallets, they're a bit special. They're 2 of 3 multi-signature wallets. So that means that it's not one private key and one public key. You actually have 3 private keys. That's the 3 in 2 of 3. 2 of which are needed to move the funds. So the client holds 1 key. We hold 1 key. And we have a third-party clearing firm which holds the 3rd key. So what does that mean? That means that every client has their funds segregated, right? Every client has control on their funds because they hold 1 key. But we can guarantee at the same time that every client that trades on the platform will not get away with their money and not pay their trades, which would add a lot of risk to the structure. At the same time, we can also guarantee that if we get hacked or if we go bankrupt, because we only have 1 key, the client can still retrieve their funds. So we have this setup which is 2 of 3, but we can very easily think of a setup where we have 8 out of 10 keys, and so we spread even more the risk between different institutions. But what it allows us to do, it allows us to be able to have some kind of control over the funds while not holding it, and so that allows everyone to trade with no counterparty risk, with no central counterparty risk.
Got it. And the funds, where are those physically being held? On a device that the client has? How does that all work?
So the wallets, the keys, so it all comes down to how the keys are stored. So there's 3 keys. So we ask every client to use a Ledger Nano S to store their key. So it's held in a hardware device. Our key is held in a dedicated hardware, also in a smart card-based hardware, which is the most secure way to protect your keys. And those keys are the access of those keys. So basically, in a smart card, we have the key, and we have a script which is coded in the smart card, which prevents us from using the key for whatever kind of reason. So our key is in a smart card, and this key can only be activated based on the trading activity on the platform. So that's what we have. It's in a pure hardware. It's disconnected from the internet. That's safest security measures. The third-party clearing firm has the same kind of process, same kind of hardware. So all the keys are held in hardware. 2 of the keys are completely disconnected from the internet, and the keys can only be used for trading operations.
Wow, very cool. I like that aspect of it, that the folks who are investing get to have control, and like you said, it's not somewhere in someone's custody warehouse or whatever it may be. You can access it at any time. And I like this fail safe of multiple keys, and if one fails, there's no one big loss. There's still a backup of having those other keys.
Absolutely, yeah.
Okay, very cool. Now, which cryptos are you going to offer, and also what locations do you currently provide services for?
So in terms of crypto, it really depends on what our client wants. So we have institutional clients right now, and the bulk of the trading is done in BTC versus USD. That's where most of the demand is, and so that makes sense to start with this currency pair. Now, we aim at being very client-centric. We're in an institutional business. We know our clients personally because we don't have millions of clients. We have hundreds of clients at the end of the day. Not right now, obviously, but we'll have hundreds of clients. It's kind of the ballpark here, and so we know them. So it's really based on the client demand. If tomorrow I have 60% of my clients that want to trade, let's say, Litecoin or ETH on the platform, well, we'll make it happen. If there's no need, we won't do it. So it's all based on what our clients want. In terms of locations, right now, so we're based in Hoboken, New Jersey, and we're servicing clients from all around the world. So we have US clients, we have Asian clients, we have European clients. So that's we're physically located. The sales team is physically located in the United States. The tech team is in Bordeaux. We service clients from all around the world, and the company is based in Hoboken.
Oh, very cool. And it's great to hear that you're servicing worldwide because, yes, this crypto market is global, and that's very cool that you're not just restricted to the U.S. Now, are the transactions that are being done, the trades, are they over-the-counter, OTC, or is some of it on public exchanges?
So neither one or the other.
Oh, okay.
So we have our own order book, right? So all of our clients, they connect to this order book, which is ours, and they place orders, buy and sell orders. Doing that, they build the order book. They build the liquidity that we have is our own liquidity.
Oh, wow.
We don't take liquidity from other exchanges. We don't do these kind of things because that adds a lot of risk, and it's not a clean way to do things. We don't do OTC because it's a market, and we don't trade on the platform ourselves. We purely provide the infrastructure, and clients can trade together. Now, that being said, so the next question is to say, how do you guarantee that there's liquidity, right?
Yeah.
Well, we consider that it's not our job to trade directly, but it's our job to guarantee that there's liquidity. So to do that, we have a few dedicated market makers, which are incentivized to provide liquidity and to provide quotes all along the order book, so that clients that come and want to trade to buy or sell Bitcoins on the platform, they can do it at a good price and with a good liquidity. So we incentivize third-party people to do that.
Oh, wow. Very cool. Now, can you tell us a bit about your institutional clients? Obviously, you don't have to name names, but the types. Are they hedge funds? What type of clients and how many do you currently have on board? And I believe I read that you have about 56 that are in the process of onboarding. Yes.
So our clients right now, the client base that we're targeting is the institutional clients which are already trading in crypto. So obviously that's not institutional clients as you would refer it in the traditional meaning. It's not pension funds. It's not, it's not insurers. It's crypto institutional. So that means hedge funds. That means OTC brokers. That means asset managers. That means prop traders as well. That means crypto businesses that need to buy and sell crypto as part of their business. For instance, lending providers. That's some of our clients are lending providers. So that's kind of the universe that we have right now. We estimate that there's between 400 and 600 cryptocurrency institutions right now that trade. We have more than 50 that are currently onboarding, so going through our KYC AML process, in the process of creating an account, and we have 10 ready to trade right now. So that's where we are at the moment. The goal, obviously, is to be able to go and see an investor, which is not right now in the cryptocurrency space, and say, look at our solution. It's safe. It looks like it looks like an equity exchange. It looks like any kind of traditional exchange with which you already trade, and you can trade with us with no counterparty risk. That would be the end goal. So kind of tap into the existing market and make it bigger with new entrants.
Very cool. And congrats on getting those institutional clients coming on board. And have you seen, even being that we're in a bear market, crypto winter, as many would say, a lot of institutional demand? Because we know a lot of the retail demand has cooled off. But I think what we've been seeing as far as statistics, it seems like the institutional folks are moving very fast into the market. The demand is growing on that end.
Yeah, when you look at the volume of exchanges in the bear market, it's actually pretty stable.
Yeah.
It hasn't, the price has slumped a lot, but the volume is obviously has diminished, but is pretty stable. So in terms of trading, there's still as much trading which is happening. Now, the benefit of having a bear market is that all the non-serious projects, if I want to be polite, if all the non-serious projects kind of, they're ejected from the space because there's no funding, there's no, you don't. Well, whereas 2 years ago, or 1.5 years ago, you only needed to have bought Bitcoin like in 2016 to be a genius. Now it's not the same. It's not the same, right? It's much more difficult, and you actually need to work. So those 18 months that we've seen of bear market, maybe more a year, but this year of bear market that we've seen, it's actually quite positive for the overall ecosystem because it's kind of filters the good projects from the bad ones. And so right now, those that survive and those that can deliver in this kind of market conditions will probably survive.
Got it. Now, this is, of course, not financial or investment advice, but what is your personal outlook, given that we were just talking about the crypto bear market? Where do you see the market later this year? I know no one can predict the future, obviously, but what is your personal outlook?
So in the pure cryptocurrency markets, so I'm not going to make projections because it doesn't work.
Yeah.
People have been talking for the past 2 or 3 years about institutions coming into the space, and that will happen someday. And I don't know if it will happen in 2019. What I can tell you is that there's important parts of the infrastructure which are getting built. We believe that LGO is an important part of the infrastructure because it's an exchange that allows people to exchange, to trade with no counterparty risk. So we think that's important, and I think that there's going to be more and more of these these important pieces of the architecture which are getting built. I mean, custodian, which works we have a lot of various custodian. Don't get me wrong, but a custodian which has exactly the institutional background that institutional investors are looking for. Liquidity providers that are coming in with even more funds and even more liquidity on the market. So I think we'll see it more and more. And that's on the crypto space. On the more of a tokenized asset and digital security space, which is something which is also very interesting to us.
Yeah.
We'll see, I think 2019 is the year where we'll see more and more regulation coming in. And in the US, you see that things are moving. In France, so that's where I'm from. There's a real political push. There's new regulations which have been voted, which are getting applied in the year. And so once the rules of the game are set, it's easier to play, right? And so that's going to move a lot of things. So don't expect. I wouldn't expect. I'm quite conservative in saying that, but I wouldn't expect a huge boom of the ecosystem, but important milestones being crossed. So infrastructure and good regulations.
And both of which are certainly needed. And I don't think a bull run, as some would say, would be ideal without those, because I think it wouldn't have the legs to stand on, because if there's no regulatory clarity and, like you said, the infrastructure. So I think those are great points. And finally, is there anything else you would like to share with us about LGO Markets, and also, potentially things that may be coming in 2019 that you can share, of course?
Yeah, absolutely. So so a few things. So LGO Markets will, obviously will expand. We'll make sure that we deliver what we promised, and we onboard as many institutional clients as possible. So that's on the LGO Market side. Within the group, we also have a retail offering that we'll be offering at the second half of 2019. So the same kind of values, the same promise of LGO Markets, which is to trade with no counterparty risk and full transparency, but for retail investors. Why are we doing that? Because it can kind of seem odd. You have this institutional market and this retail market. Well, if you look at what blockchain and the blockchain technology and what cryptocurrency allow you to do, it's direct market access for everyone in a perfectly scalable infrastructure. So in a blockchain world, you can have Fidelity, which settles with John Smith. So it makes sense to start with a market for Fidelity, and it makes sense to start with a market for John Smith, and potentially, in the end, in the long term, join them together, because that's what the technology allows you to do.
Very cool. Hugo, it's all great information, very insightful, exciting stuff happening on the LGO Markets front. So thank you so much for joining us today. And everyone, I will put a link in the description to the LGO Markets website. Be sure to check it out to learn more about their services. A lot of great features and unique things happening there. So Hugo, thank you so much once again.
Thank you very much.